Hey, everybody. Welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's video, I want to deep dive into the technical analysis on Robinhood, taking a look at some concerning signals for those of you out there that might be bullish, just things that I want you to be aware of. It could tell us big institutions are unloading into your buying pressure. All right. And again, very, very important for every investor to at least be aware of it, if not acting on it. All right. So let's jump into the Robinhood chart. We can see Robinhood again, incredible move from August of 2024 to the high in February. We then had the big correction with the Liberation Day kind of sell off there. And then the next big bull run in Robinhood has taken place. Now, again, retail remains exceedingly bullish. But I want to show you a few things that have me a little bit more cautious on this chart. Let's take that same August 2024 low and let's connect it through the previous high from early 2025 before the Liberation Day sell-off in the market. Now extend that trend line further out, and lo and behold, look at what we get. We get a trend line that is now dictating every major high in Robinhood stock. So very clearly right here, this was in February of 2025. The stock pulled back from $67 down to $30. That's over 50% decline. We then had this secondary hit right here. We had a much smaller pullback from about $110 down to 93. And then we came up again, tagging it right here at 117. And we pulled back to about 106. And so again, very clearly, just by looking at the chart, we see that, again, every time we hit this trend line, this ascending trend line, we're getting some sort of pullback. And so just using basic common sense and logic, which again is the crux of technical analysis, we know that this line as of now is major resistance, okay? And it continues to be so in the near term. So upside is somewhat limited. And ultimately, again, while we haven't had a corrective move like what we had back here, we still are getting pullbacks. And so upside is limited. Downside, even these last few pullbacks, has been between $10 and $20 of pullbacks. You have to think that risk reward to upside is not great. Reward, again, from current levels of 114 to maybe 119 versus downside would be down to, let's say, $100 or even lower. All right, the next thing we want to take a look at is the RSI. So let's take a look. And this is really where I'm starting to get more concerned. Now, see this yellow line? This is the average. I don't even use that. I actually take it off. What I do is I just use the basic RSI. I like to change it to orange because it pops out a little bit more. But this is what has me concerned. And this is what tells me there's institutional unloading, right? So essentially you have a high and a higher high here, right? So high and higher high. This was the previous all-time high going back to July, early July or mid-July. And here we are in early to mid-August, and we made a new all-time high, right? So you have a high and higher high. On the RSI, there's a definitive lower high and lower high. That in technical analysis, we refer to as a negative divergence. And that tells us again that momentum is starting to slow in terms of buying pressure. It also, again, if you look historically at RSI, it coexists with institutions starting to unload, utilizing the volume that retail is pumping in by buying. Retail just buy. They are now unloading into it. And that's why you get the negative divergence. And again, as always, we see in history, it's usually at the highs of a chart where institutional, kind of the best, the smartest money, the money that has the most information, they unload into that frenzy of retail buyers that are FOMOing in to a chart. So that, again, is something very, very concerning on this Robinhood chart. Now, let's go here to a couple other things. I'm just going to minimize this. We want to look and say, okay, well, what level does Robinhood need to break to then be in really free fall mode, right? Because right now you could pull back. Honestly, you could pull back to like $100 and it's really not that big of a deal. That's your run of the mill, kind of like this pullback, even just a little bit bigger than this one, but it wouldn't be a big deal. If we take this trend line and we drag it right up here, look at this. This is what I want you guys to pay attention to. So this trend line, look at how literally it gives us a basis. And right, part of what is being a great investor and trader is that you need to be able to tell when something is trading in a range and still holding its uptrend versus when it breaks its uptrend and is now potentially in dire straits or in risk of having a bigger fall. And that's what this trend line does for us, right? And so essentially we can see this upsloping trend line where you have a beautiful little look at all these hits along the way. Here you even pierced it, but then you recovered. Here you hit it again. And look, just a couple days ago, we hit it right there. And so this gives us a basis to say, okay, if and when Robinhood breaks this trend line, which is interestingly enough at about $108 to $109, if it gets below there on a daily closing basis, obviously confirmation would be helpful. But if it does that, then you're at risk of a much bigger correction. Okay, now again, is it going to be another $10, $20, $30? We don't know. I mean, no one knows. But the idea is that as long as Robinhood stays within this zone, even with the negative divergence, it is still technically safe to continue to grind up. Now, listen, these two trend lines are going to come closer and closer together, right? Until they merge somewhere further out in September or early October. So that's going to eventually force price to either break out or break down, right? Break out, break down, one or the other. But the point being is that follow this underbelly trend line if you are long Robinhood. If it breaks with a daily close below, be very careful. You will likely get a major correction in Robinhood at that point. And again, my goal here, folks, is listen, you guys trade the way you want to trade. You invest the way you want to invest. I'm here to give you technical insights so that you can judge for yourself the probabilities. Like, when do probabilities of a big correction increase dramatically on Robinhood? When it breaks that ascending lower trend line that we just talked about around 108, 109 right now. As long as it's in this pattern, it could grind higher a little bit more, although we did show there is a risk. There's the minimal upside, right? Minimal upside to about 119, maybe 120. Not a lot of upside there for the risk that it could break down, but you can always just wait for that trend line to break. And that trend line is rising. So it's kind of like a rising trailing stop underneath the price of Robinhood. All right, guys, as always, our job here at Verified Investing is to look at the charts and give you the data analysis, probability. All right, not hype, not FOMO, not FUD, not any of that nonsense, not emotion, essentially. No narratives, no nothing. It's just the charts. Essentially, our motto, no BS, just charts. Now, if you're interested in getting real-time trading opportunities on the swing trade side like this, then join us at Smart Money Stocks and ETFs at verifiedinvesting.com. That's where I literally swing trade Robinhood up, down, left, right, you name it, along with Palantir and Tesla and all the rest of them. That's what we do there. I give my exact entries and exits out. So come join us here at Verified Investing. But I hope you found this video insightful and educational. You guys are awesome. Take care.